So there's three main areas of why someone can be inquired into. The first one is that tax returns or accounts give rise to anomalies and show risk. The second one is that HMRC are running a campaign in a particular area. And the third is informers. If we take the first, the tax return containing risk, that could be something as simple as expenses, let's say on property, for example, being included all in one box as an administrative expense rather than broken down into areas expenses. It could be where someone's got a trade, they have exceptionally high expenses in one particular area, for example, legal and professional costs are often looked into. That could differ substantially from the previous year, and as a result, that is flagged up as a risk. HMRC run regular campaigns. We talked earlier about HMRC's Risk and Intelligence Service. They identify particular industry sectors that they are going to look into. For example, the Let Property campaign, the food industry was subject to a campaign, and high net worth individuals are now also subject to a campaign. If we look at the Let Property campaign as a particular area, the information available to HMRC on that case is, for example, their council tax records, mortgage or lender's records, information provided by management agencies direct to HMRC, and obviously the land registry. And all that information can be compared automatically through HMRC's Connect system to identify people who aren't declaring their income. When you look at the food industry, a lot of that industry works in cash. So HMRC take a very much different approach in identifying those anomalies. It might be that they are looking at similar businesses and the economics of those businesses and whether they differ tremendously from other businesses. For example, a takeaway in one street may have 50 units sold a night, whereas another takeaway may have 100 units sold. So when looking at restaurants, also another angle that HMRC may take is where they apply for additional licenses, or they extend the restaurant to include extra tables. All that information gives rise to a growing business, whereas the information returned to them may actually show a decline in profitability. They're the type of factors that all give rise and are collected by Connect, the software that HMRC and Risk Intelligence Service use, that would identify taxpayers for inquiry. And the third and interesting category I mentioned was informers. Informers are actually one of the biggest source of HMRC inquiries still today, despite all the information that they have to their hands. Informers could be, for example, a disgruntled employee, a mistress or an ex-spouse who decides that either their other half or their employer is doing something untoward, and they report that to HMRC. It's a little bit more proactive on HMRC's side. In fact, they actually encourage informers to come forward. So HMRC, for example, have dedicated hotlines for people to inform them of employers who aren't declaring the right amount of taxes or are paying people in cash, as well as for business owners and other people that you know that aren't paying the correct amount of tax. And it may be just arising from a quick argument of 4 out in the pub that someone decides that they are going to inform HMRC that there's a tax irregularity with a particular person.